Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know the drill. Smash that like button, subscribe if you haven't. Just a little disclaimer, nothing should be construed as financial investment advice. Just my opinions, my thoughts on the markets. You can read more on the disclaimer below. So let's get into today's action. A muted day for the most part. I mean, it was a down day, but if you look at it, the Dow Jones, which was down 2,000, was only down 349. And if you look at it, whew, was it actually up? Open down, it was in the green, and then it just went finished down, but it wasn't really gapped down though. I remember it was down 1,000. Look at the S&P, it's only down 11. And they were hoping to, I guess, what I read, they said it was some tariff relief. Then they said there wasn't, but, this possibly could be the bottom. This is bottom. And look at the NASDAQ, that finished in the green. But I wouldn't count my chickens or before they hatch or anything. And if you look at gold, I mean, what it could is do a bounce and then go back down more. That's very possible. Remember, markets go down and up in waves. They don't go straight down. So this could just be a temporary bounce before call it a bear market rally, or if it's Elliott wave, call it a wave 2 or a B wave up or wave 4 or a D wave. But look at gold, same thing, and then it just came down. But look at silver. I'm just doing GLD, but this was actually up 0.22. So silver had a positive day. Uh, so yeah, I think this is the beginning of a bear market. I had comments that this is a rip. It could rip. I think triple tops are rare though, so I think if it goes back to 6,000, then it will be a final sort of blow off top. But remember what I said? I think a big stimulus is coming, a monetary and fiscal stimulus. The tax cuts will come. And remember last time during the Trump's first presidency, the big reason the stock market went up was the tax cuts. The tax cuts enabled money to be brought from overseas to here, and a lot of that went into the market, driving it up. So big physical and monetary stimulus, and then the big reason under the Biden presidency was all the QE and monetary. So I think some sort of form of stimulus is coming, whether it's from a tax side, a monetary side, or a fiscal. I think the Fed will start cutting rates and rate fastly. I, cover this on videos after videos. So go back and look at my other videos. You'll see it's sort of playing out the way I said. I'm not bragging, just true. But look at this here, too. Consumer credit down by 0.8%. This was the only real data. Used cars prices went down, and versus the 15 billion increase. And this is one reason the market's going down, more so than the tariffs. This is a economy built off credit. And when credit is contracting, guess what? The markets are going to be contracting. So U.S. consumer borrowing dipped to 0.8 billion in February compared to the 15 billion expected. So look at this. Consumer credit fell marginally. Borrowing is down at an annual rate of 2% or 0.2. So there you go. As long as, look at this too. Goldman lowers GDP and forecast and ups recession odds. So, and I think one of the reasons that, let's go back to the consumer credit. Consumer credit is happening is I think so many people got laid off. They're no longer spending. They don't feel comfortable they can pay it back or at least make the minimum payments. And so what I think a lot of people did was looking at this angle, Schwab Trading Activity Index slides in March along with stocks. So here it is. Schwab Trading Activity Index fell 48.36 to March from 51.94. Moderate low range of historical averages. So this is moderate to low. So clients stepped away from equities as stocks slumped to a 6-month low. And, they say the tariffs or whatever. I think what it is a lot of them lost their jobs and and what happened, you saw, the credit is declining. So maybe someone lost their job and they said, hey, I'm going to sell some of these stocks and I have all this credit card debt and this is a 30% interest rate. I'm going to pay off the credit card debt. That way I don't have to worry about the credit card debt piling. Or, hey, I have this auto loan and I'm going to sell some of my stocks and I'm going to pay off the auto loan. Or if someone has a huge portfolio and they lost everything, they lost their job, but they have a huge mortgage, they could say, hey, if I have a $400,000 portfolio and my mortgage is $200,000 less, maybe I can just sell half my portfolio and pay off the mortgage. So look at this. Schwab clients decreased their market exposure by offloading equities in March, but these outflows were buyouts somewhat by buying fixed incomes and ETFs. So if you look at it, fixed income, some of it, but not all of it. So yeah, some of it, they may have said there's a lot of uncertainty or whatnot. We're going to get fixed income and ETFs. But I think a lot of them were, and you can tell going to this data, consumer credit is down. What they did, whereas the auto loans, credit card, mortgage debt, or name that debt they have now. It's not student loans because collections and data, and the young people probably don't have a portfolio, but what it probably is, one of those things, they said, all right, we lost our job. This debt will be more. I don't know if I can make the payment. So, and if they're smart, they probably sold a little more so they have some cash on the side. But maybe they think unemployment is like, all right, I'll have unemployment, but I need to be able to save this and really cut my spending. And, or maybe it's even both. Like I have a $40,000 car loan. I have 20 grand in credit card debt. I have $100,000. So maybe I can I'll sell $70,000. I'll still have $30,000 in stocks, but I'll pay off the car loan. I'll pay off the credit card loan. And then I have $10,000 to make. I have $10,000 to save. Maybe I'll get unemployment. Maybe I'll do some gig work. I know some people that got laid off became bartending, so they're like, this will give me some time and I can pay off some bills and the gig work will buy me more time. So that's what I think it was. You can see from the Schwab Trading Index, this is all cumulative. Remember, I put things together. Schwab Index and the layoffs, a lot of people probably sold what they had and they finally decided the market's higher now. Maybe I'll get a job when it's down and I can get lucky, but they use that to pay off their debt. So, and speaking of, look at this. Speaking of the housing bubble, I talk about those. Builders are sitting on a pile of unsold homes and are slashing prices and offering mortgage rates deals. So growing inventory and now they're naming Texas and Florida. But look, they're even dangling stuff like, of course, they can't just, they have to have an ad. And sounds like mortgage rate buydowns, closing cost credits, money towards upgrades, slashing prices altogether. Well, if they start slashing the prices of new homes, that means used homes, they're going to have to come down. So would you rather buy a new or a used home? Much rather buy a new home. So, and look at this. They say there's an inventory, but inventory has steadily grown since 2022. So look at this. They're slowing down construction while trying to clear their backlog. Well, they're going to take a long time to. Yes, we fell pretty far in terms of prices. So you look at it. If you look at it, housing prices still have to come down more in order to get people into those homes, and not just housing, also other, spur the economy. So obviously they're not going to, but. And lastly, just want to piggyback off what I said is, yeah, I'm convinced. If you look at the Schwab Trading Index, that's a big retail, and you look at the consumer credit numbers that came out, that's probably what happened. Is a lot of people probably have lost their jobs and they had a portfolio and they're like, I don't know how I'm going to make this monthly payment. Let's sell this, pay off that, so we don't have to worry about that. It's one less thing we have to worry about. So. Anyway, that's all I have. Not financial investment advice, just my opinions, and we'll see where this goes. I think gold's still in correcting mode. Stock market, possible bottom, but things aren't looking good. I'd like to see sort of a. It tried the bottom too because it gapped down, made a positive, but it couldn't finish positive. So could take a sideways or bounce a little and come back down even harder. I this from just algorithmic, meaning my mind, this doesn't look like the bottom, but it could be. So anyway, that's all. That's all. So remember, not investment advice. And I'll see you next video.